Hello everyone, welcome back again into our special subject Specialized Auditing Paper 6. In the previous lecture, we have discussed about all the compliances for GST audit such as qualification of GST auditor and eligibility, appointment of GST auditor, accounts to be reviewed by GST auditor, forms for annual return and GST audit, review of comments by GST auditor, submission of GST audit report and annual return. Documents are required to be submitted under GST audit. Due dates for submission of GST audit report and penalty of non-compliance under GST audit. After that, we have also discussed about the types of GST audit such as turnover based audit, general audit and special audit. And today we are going to understand procedure of GST audit. Further, we will discuss difference between GSTR 9 and GSTR 9C. After that, we will see structure of GSTR 9C, and last we will see GST Audit Checklist. Now let's come to the first topic of GST Audit Procedure. GST procedure consists of 4 actionable, which includes first is audits, second is assessments, third is demand and recovery, and fourth is advance ruling. Let's understand these procedure in detail. So, GST audit procedure of conducting the audit as per section 2 subsection 13 of the GST Act. Audit means checking the records and documents of the business for their authenticity. Moreover, through audit, the correctness of the turnover declared by the business, GST paid and refund availed can be checked. It can also be checked whether the GST rules have been followed by the business or not. So, GST audit procedure of conducting the audit says that the authorized officer and officials accompanying him shall conduct the audit of books and accounts of the registered person. They will verify all the requisite documents, that is, shall verify the books maintained by the registered person and the return and statement furnished under the Act. The proper officer and his team shall verify the correctness of the turnover, the rate of tax applied on the supply of goods or services or both, exemptions and deduction claimed, refund claimed, the input tax credit availed and utilized, and record the findings in the audit notes. Now let's move on second point of GST audit procedure, that is assessment. The GST liability can be ascertained only when the books of accounts are assessed by the business. Assessment therefore means the calculation of tax liability of the business. Under GST audit, there are 5 types of assessment which can be done. These types includes: first is self-assessment, second is provisional assessment, third is scrutiny assessment, fourth is summary assessment, and last is based judgment assessment. Let's understand each type of assessment in detail. So first is self-assessment. Friends, self-assessment is when the tax liability is calculated and determined by the registered business itself. As per the GST Act, every registered assessee is required to calculate its own tax liability and furnish GST returns at the end of the tax period. This self-calculation of tax is called self-assessment. Now, second is provisional assessment. As per the provisions of section 60, read with rule 98 of the CGST rules 2017, provisional assessment is applicable in certain situations. Let's understand the concept of this assessment in certain situations. We can see 7 situations are given. So, first is when is a provisional assessment required. A provisional assessment is required when the assessee is unable to calculate the value of goods, services, both goods and services, or the tax rate which is applicable on the goods and services produced. Now second is, what is the process of provisional assessment? See, in case of a provisional assessment, the assessee might submit an application for paying provisional tax. The reasons for paying a provisional tax would have to be stated and the relevant documents would also have to be submitted along with the application. The application can be submitted online or through a facilitation center which has been notified by the commissioner. Third is, who can order a provisional assessment? A proper office of the GST Act can order a provisional assessment. Now, fourth situation is, what is the time limit for provisional assessment? See, once the application for provisional assessment is received, a proper officer would allow payment of tax on a provisional basis at a rate or value specified by him within 90 days of receiving the application for provisional assessment. Then fifth is, what is the security amount required for the assessment? See, the assessee should make a bond in a prescribed format with a surety or security of up to 25% of the amount of the bond. This bond would make the assessee liable to pay any difference in tax if applicable. If the amount of provisional tax is lower than the amount of tax calculated on a final basis, the security would be released if the assessee files an application after the final assessment order has been issued. Then, what is the time limit for final assessment? Once the bond is made, the proper officer would pass a final assessment order stating the final amount of tax which should be paid. This final assessment order would be passed within 6 months of intimation of the order which was issued as per the provisions of section 60 subsection 1 of the Act. However, the period of 6 months can be increased by another 6 months by the joint commissioner or additional commissioner. Moreover, the commissioner himself can extend the period further by up to 4 years. Thus, a provisional assessment can continue for up to 5 years for final assessment, the proper officer would issue a notice wherein the assessee would have to provide the records and books of accounts to the officer. Based on the assessee's submitted records, the final assessment would be done and the final tax liability would be calculated. And last situation is, what is the interest payable? See, if the final tax amount is more than the provisional assessment amount, the assessee would have to pay an interest on the excess amount under the provisions of section 60 subsection 4. The interest rate would be 18% per annum and the interest would be payable from the first day after the payment due date till the day the tax has actually been paid. Now come to the third assessment, scrutiny assessment. If the proper officer finds any discrepancies in the returns of the assessee, scrutiny of the returns would be done under section 61 subsection 1. The proper officer would scrutinize the returns to check their correctness, and if any discrepancies are found, the same would be communicated to the assessee. The assessee would then have to provide the reasons for the discrepancies found. The assessee can accept the discrepancies and pay the tax and other penalties relating to such discrepancies. Now, fourth assessment is summary assessment. Summary assessment is done under the provisions of section 64. Read with rule 100 of the CGST rules 2017. This type of assessment is done when the assessing officer believes that a delay in mentioning the tax liability would hamper the revenue. To protect the revenue from being harmed, the order of summary assessment can be given after taking permission from the additional or joint customer. And last is based judge assessment. See, as per section 62, read with rule 100 of the CGST rules 2017. Based judgment assessment is done in two instances which are given. Instances means example. So, first instance is in case of non-filing of returns. Students, if the assessee does not furnish his returns under section 39 or section 45, a notice as per the provisions of section 46 would be issued by the proper officer. This notice would dictate the assessee to furnish his return within 15 days. If the assessee fails to furnish his returns within this period, the proper officer would calculate the tax liability of the assessee himself. This calculation would be done based on the best judgment of the proper officer after taking into consideration the records of the business which the officer can access. The officer would then issue an assessment order within 5 years from the date mentioned under section 44. Second instance is if the assessee is unregistered. It means if a taxable assessee is not registered or if the assessee's registration has been cancelled as per the provision of section 29 subsection 2, the proper officer would determine the tax liability of such assessees as per his best judgment. The officer would send a notice as per Rule 100, Sub Rule 2, before the assessment stating the reason of best judgment assessment. Let's come to the third point of GST procedure, that is demand and recovery. The option of demand and recovery would be applicable in the following cases. First is if the tax paid is incorrect. Second is if no tax has been paid. Third is if the tax refund claimed is incorrect. If the input tax credit claimed is incorrect. Friends, in these cases, the proper officer would issue a notice to the assessee to state the reasons for the above cases. Moreover, the officer would also issue a demand for the assessee to pay the tax and penalty for fraud. Demand would be raised by the officer for the above cases and also when tax is collected but not deposited with the government, or when the assessee paid CGST or SGST when IGST was supposed to be paid. If the demand is not paid by the assessee, recovery proceedings are started by the GST authority. Now, last point of GST procedure is advance ruling. See, advance ruling means getting clarifications from the GST authority on various tax related matters before starting any activity. This reduces the cost of litigations. Advance ruling is a written decision which is given by the tax authority to an applicant when queries regarding the supply of goods and services are made by the applicant. So, if you are a taxable assessee liable to pay GST on your goods and services, understand the GST procedure and their rules so that you can calculate and files your GST returns without mistakes. Now, let's see next topic. What is the difference between GSTR9 and GSTR9C? So, first difference is GSTR9 is a form for GST annual return and GSTR9C is a form for GST audit. Second difference is GSTR9 was mandatory for all registered taxpayer. However, in 30th GST Council meeting, filing of GST annual return became optional for taxpayer whose turnover is up to rupees 2 crores. GSTR9C is required to be filed by taxpayers whose aggregate turnover exceeds rupees 2 crores in a financial year. Then third difference is GSTR9 is consolidation of GST returns and GSTR9C is a reconciliation and certification from the auditor. Fourth difference is GSTR9 is not required to be certified by a CA or cost accountant. GSTR9C is required to be certified by a CA or cost accountant. Fifth difference is No document or annexures are required to be submitted along with GSTR9C, GSTR9. And here, audited financial statements are required to be submitted along with GSTR9C. Sixth difference is penalty rupees 200 per day or 0.25% of total turnover, whichever is lower. And in GSTR9C, there is no specific provision given for penalty, but general penalty under section 125 of rupees 25,000 may be levied. Now let's see next topic. What is the structure of GSTR9C? Students, the reconciliation statement is divided into two parts. So first is part A. It is the reconciliation statement. And second is part B, is the certification by a chartered accountant or cost accountant. In that part A, it is further subdivided in 5 parts. Part 1, it seeks basic details about the registered person like financial year, GST in, legal name, trade name. It is also required to mention whether registered person is liable to be audited under any other act. Part 2, this part requires the reconciliation of turnover declared in audited financial statement with turnover declared in annual return. There may be so many reasons for such differences. Then part 3, this part deals with reconciliation of taxes paid. Next, part 4, reconciliation of input tax credits as per books of accounts and ITC as declared in the annual return. And last, part 5, this part requires the auditor to recommend additional liability arising due to non-reconciliation. The additional liability has been mentioned separately under various categories of rate of tax, input tax credits, interest, late fees, penalty, any other amount not included in the GSTR9, refund to be paid back, and outstanding demand to be settled. And now last topic is GST Audit Checklist. So students, as per the GST Audit Checklist, sticker rules are now in force that makes it absolutely necessary to make analysis of the data gaps between GST returns. It has strictly asked the business houses to conduct periodic checks and install internal controls. This would for sure do away with the data gaps and make sure the necessary compliance with the GST rules. Here is given the mandatory GST audit checklist that requires strict compliance. So first point is checking of GSTR3B in relation to GSTR1 and GSTR2A. In that, two important points get covered under this heading. First is interest and penalties in GST Act. Friends, under this recipient could claim extra input tax credit, and for this it is compulsory for him to make a payment of interest at 24%. This is applicable on the excess tax amount. Auditors need to reconcile the GSTR 3B with GSTR 2A to make sure that organization would not claim extra tax credit. If it has been paid in excess, company would pay interest and the tax amount on the applicable date when the GST authorities come to know about the data gaps between GSTR 3B and GSTR 2A. The taxpayers might have to pay the interest and penalty. Second point is amendment in GSTR. When the auditor comes to know about the data gaps, he would recommend the management to make amendment of the invoices at summary levels in GSTR 1. Now, second checklist is checking particulars of invoice. See, it is very clear that there are specific rules related to details in the invoices. If the format of the invoices varies, he would advise the management to make amendment of the invoice and include the requirements of the GST rules. Then third checklist is reversal of input tax credit for non-payment in 180 days. At this stage, the GST auditor has to check the following details. So first is difference between invoice date and date of payment, and this would not exceed 180 days. Second is the amount of payment needs to remain equal with invoice amount and GST. If the payment amount is less than invoice amount plus GST, the input tax credit to the extent of short payment would get reversed. Now, fourth checklist is reviving e-way bill and matching with invoices. This step consists of 3 stages such as result of any mismatch shown in the e-way bills in relation to invoice. In that, as it is a familiar fact that an e-way bills is not alterable and it is not possible to delete it, but it is permissible for cancellation within 24 hours of its generation. When the goods get shifted without e-way bill, the designated authority could impose fine for this. Second step is important points, in that whenever it is necessary for business, e-way bills is quite unavoidable, and details given in the e-way bill need to match with invoice. Third step is movement of goods in non-motorized vehicles. In that, whenever transportation takes place in non-motorized vehicles, the necessity of issuing e-way bills does not arise. As some businesses are taking to this practice in order to avoid the e-way bills, internal auditor need to closely scrutinize the e-way bill is worth more than 50,000 rupees. And last checklist, cross-checking the stock pending with job workers on 30th June 2017. C. As it is mandatory that goods lying with job workers on 30th June 2017 need to get received within a period of 1 year, the capital goods lying with job workers requires to be brought back before 30th June 2019 within a period of 2 years. So students, here we have completed first chapter, that is audit under tax laws. Till this lecture we have tried to cover all the topics under this chapter. I hope that you all got it properly. If you have any doubts on any topic, then ask me in comment section. So we will come back again with the new chapter in next video. Thank you.